Today, the KSE 100 Index looks like an absolute bloodbath. I mean, bleeding out over 1,700 points to close at 174,429.
Yeah, that is a very big, very red number to stare at.
Right, but if you zoom out just 1 year on these July 22, 2026 charts, you're staring at a massive 25% gain. So, like, which reality are we actually trading in here? Is a 1% daily drop the start of a structural breakdown? Or is it just, market noise?
Oh, it's definitely the noise of a market just catching its breath. I mean, if you pull up the 4-hour chart for the index, the RSI is hovering right around 38.
So we're flirting with oversold territory.
Exactly. We are getting close to oversold. But, in the context of a 25% yearly run-up, this is really just a healthy, necessary pullback.
Well, right, the broader index is cooling off. But seeing that RSI at 38 doesn't mean everything is moving in lockstep, right? Because when you dig into the individual order books, the reactions to this macro cool down are just violently fragmented.
Oh, wildly different. Yeah, completely scattered.
Like, look at Ghandhara Automobiles, or GAL, trading around 577. It's behaving like a caffeinated squirrel on these charts.
That's a great way to put it. It's just massive vertical spikes and steep drops.
Yeah, exactly like a feedback loop in a microphone. Retail traders see a spike, they buy in, and they amplify the noise until it screeches into a massive vertical drop. So, is technical analysis even useful on something as erratic as GAL right now?
Well, I mean, you can't draw a traditional trend line on pure panic buying, but the chaos itself is the data. That screech is pure momentum chasing. GL's chart is driven entirely by speculative emotion dominating the order book.
Right, so emotion rules, and then you contrast that chaotic micro-reality with something like K Electric.
Right, KL.
Yeah, KL is trading down at 8.08, and its chart is practically a flat line. It's basically a hibernating bear compared to GAL.
Yeah, completely asleep. KEL's flatline is driven by institutional holding patterns. Utility stocks like KEL are anchored by steady long-term liquidity.
Which absorbs all those retail shocks.
Precisely. It absorbs the kind of shocks that make GAL go vertical. It really proves that the KSE 100 headline number completely masks the microstructure of how these specific assets actually trade.
Wow, yeah. So if GAL is driven purely by human emotion and KEL is anchored by institutional holding, then, well, the charts for Pakistan State Oil, PSO, and Pak Telecom, PTC, look like they were drawn by a machine.
Because they probably were.
Right. They're executing perfect technical channels. PSO is hovering around 354 at PTC right at 70, and the structure is just flawless. It's like bowling with the bumpers up.
I love that analogy, yeah.
The price just keeps bouncing mathematically between these upper and lower support lines. But wait, if PSO is just bouncing between algorithms, are retail investors just getting chopped up by institutions waiting at those bumper lines?
Often, yes. I mean, these charts beautifully illustrate algorithmic execution in action. Institutional algorithms are programmed to provide liquidity or, execute trades at those exact bumper lines.
Wow, so it becomes a self-fulfilling prophecy of supply and demand.
Exactly. The buyers and sellers are literally waiting for those exact lines. The price won't break that channel until there's a fundamental shift.
Like what? What forces a stock to jump the bumper?
Well, usually a major earnings surprise or a macro shock, something that forces those algorithms to completely reprice their models.
Ah, got it. So until the algorithm changes its mind, the bumpers hold.
Yep. Exactly.
Well, that really puts today's 1% index drop into perspective. I mean, that single red KSE 100 number hides a 25% macro bull run. And beneath that, you have vastly different ecosystems.
Right. You've got the momentum-driven feedback loop of the auto stocks.
Yeah, and the institutional flatline of utilities.
And the algorithmic bumper bowling of oil and telecom. The charts really only map out the battlefield from yesterday. They show us exactly where the algorithms held the line and where human emotion took over.
Which leaves you with a really tough choice for tomorrow's open. I mean, the charts tell us exactly what happened today, July 22. But when the bell rings tomorrow, are you parking your capital in the mathematical safety of a telecom? Or are you trying to ride the emotional gamble of an auto stock? Something to think about. Thanks for joining us for this deep dive into the numbers. We'll catch you next time.